Hey everyone, Craig Gordon, Vice President of Prevail, and I'm joined by our President, Andrew Stafford.
Good to be here.
Andrew, always great to have you here, and love all your thoughts and perspective. And as we enter the summer months, this is always something we talk about in the industry. I think people that have been investing a long time kind of understand the trends, right? We've got some, usually July is pretty strong, but then we start to end and typically maybe have some pullback. Couple questions. One, why is that? Why are we seeing that historical trend? What are we doing to navigate that? What are we thinking about? What are we looking at? Maybe just give some feedback to the audience.
The old adage, sell in May and go away, right?
That's right.
And then you come back in the fourth quarter. So it's really interesting as you think about it because there's a logical side to it and there's an emotional side to it. And the summer months are what I will say volatile, right?
They are.
So we have a Jekyll and Hyde. If you were to look historically, and we obviously can't predict what's going to happen in the future, but we're taking historical data trying to make some assumptions, right? July historically is one of the strongest months of the market historically. Will it be this year? We don't know. But August and September, you think of the bookends, are traditionally bad. And so a lot of people try to say, well, what happens? I think there's a couple of things. First of all, as summer gets near and vacations happen and travel happens and things, just in all of our businesses, everybody gets business. Volume in the markets goes down. And when volume goes down, headlines and any news that hits the market has a larger impact than if volume was higher. And so therefore, it causes extreme volatility throughout the summer months. What I find interesting is as we look into September, which is historically one of the worst months, you'd ask yourself, why is that? Number one, you're coming out of summer, still low volume, but you're starting to see a lot of institutional investors and big money rebalance and prepare the portfolios for the fourth quarter, right? So they're coming back after summer break or whatever the case may be. They've kind of ridden, they may be taking profits or they may be rotating, but they're taking the portfolios and they're adjusting them for what I would call the ninth inning run. And that causes a lot of extreme volatility or changes or downward pressure in the markets as they sell out of certain aspects and go into others. So it's really more tactical in nature. It just happens to be, the summer, you include the volume being down, headlines coming up, and then rotation. It kind of all happens at the same time.
And I think, like we always talk about, obviously we actively manage all of our portfolios. We're not trying to time the market. I think it's really difficult. So I would just say, to a lot of our listeners, don't try to necessarily time it based on that. Be thoughtful of it, be aware of it. It'll be interesting, and we're going to talk a little bit more about this here later, if SpaceX, the largest IPO that we've had, and as you start to look at the lockout periods beginning to phase, is that going to disrupt the historical trend? And I don't know.
We don't know.
But it is something that I think we're watching, and again, we'll get more into that as well.
I think the key is, again, in the strategies we try to utilize here at Prevail is when you are risk on and risk off and how you pull that, never trying to time the market, but trying to understand market cycles. And if you'd like to learn more, check us out at prevailiws.com.